Hi everybody, this is Lara with your weekly video for oil for the week ending Friday 1st of July. Both accounts expected upward movement last week, that's what we've got, and they're still the same, and they're both expecting upward movement next week. How much more we're going to get is going to start to diverge between the two. We should assume the upward trend continues while price remains above 98.2 and the final target remains the same, 132 to 131, and the main Elliott Wave count sees price must make a new high above 129.44. So if that's the correct count, then that's what has to happen. We have an alternate though. A new low below 98.20 would invalidate the bullish Elliott Wave count and add confidence that oil is in a new bear market. We're not there yet though. Elliott Wave analysis first. This is the monthly chart, and I'm publishing this every week because this trend channel is important. This is seen as a counter trend movement, labelled Supercycle 2, and it subdivides as a double zigzag, a fairly common structure for a second wave. When 2 ends, 3 begins. Supercycle 3 has to unfold as an impulse and must meet all of those core Elliott Wave rules that even a cursory knowledge of Elliott Wave, most people know what those rules are. Wave 1 has to be a 5-wave structure, wave 2 may not move beyond the start of 1, and then 3 has to move beyond 1 and may only subdivide as an impulse, and 3 can't be the shortest out of 1, 3 and 5, and then 4 has to be a corrective structure and can't overlap 1 price territory, and then 5 has to be a 5-wave structure and usually moves beyond the end of 3. So those are your core Elliott Wave rules for the next several years for oil. At this stage we're looking for the end of cycle 1 and it's unfolding as an impulse with all those core rules I just outlined. 1, 2, can't move beyond the start of 1, 3, 4, 5. 5 is also unfolding as an impulse, again the same rules apply. When 5 completes cycle wave 1, then we'll be expecting a bear market for oil, which may be deep enough to find support at the upper edge of this channel. So this channel is important. Draw on a semi-log scale. Draw the first trend line from this high to this high. Place a copy on this low. Resistance, pullback, breakthrough, pullback, bounce away, pullback, finding support perfectly at the line. Eventual deep pullback may find support at that line. Cycle 2 may not move beyond the start of 1 below 10.24. Let's focus in now on the structure of cycle 1 on the weekly chart. This slow down here is the slow down here. Another one of those core rules for an impulse is only 2 of the 3 actionary waves of an impulse may be extended. Actionary waves are 1, 3 and 5. In this instance 3 is extended and 5 is extending. That meets core rules. 1 was not extended. 1, 2, 3, 4, 5, and now within 5, 1, 2, 3, 4, 5. Intermediate 5 may only subdivide as a 5-wave motive structure. That's either an impulse or an ending diagonal, and it looks like it may be an ending diagonal. When a 5th wave subdivides as a diagonal, it may not be truncated. Another way of saying that is the 5th wave must move beyond the end of the 3rd wave. It can't fall short. That's called a truncation. And so this wave count sees price must make a new high or at least reach this point or move above. Let's take a look now at the structure of this ending diagonal where the end of 4 is this point down here. Here's the structure of intermediate 5. Within an ending diagonal, all of the subwaves must subdivide as zigzags. So there's a zigzag for 1, 2, 3, 4, and 5 may only subdivide as a zigzag. A, B, C. We could probably put those labels on for A and B now. This diagonal is expanding because 3 is longer than 1. And 4 is longer than 2. That means 5 must be longer than 3. The target is for primary 5 to reach 1.618, the length of primary 3 at 132, which is really close to where intermediate 5 would reach 1.618, the length of intermediate 1 at 131. A target calculated at 2 Elliott Wave degrees with 2 price points that are very close together like this has a good probability. Alternately, it is possible to see a 5-wave impulse over at the last high for oil. That's possible. That could be cycle wave 1, and cycle 2 could be continuing lower as a zigzag, A, B, C. Let's The problem with this wave count is the subdivisions within primary wave 3. From this low to this high, to see this upward movement as a 5-wave structure, you have to see a fourth and second wave somewhere in here, no matter what degree you're going to label it, that are just disproportionate, giving the wave count the wrong look. And I think the best way to see it is 1, 2, 3, 4, 5 for primary 3, but 4 is so much deeper and longer lasting than 2, this wave count looks forced, but it's possible. If cycle 2 is continuing, we can draw a channel using Elliott's technique from the start of A to the end of B, copy on A, and look out for support at the lower edge. Let's take a look at this at the daily chart level. Yeah, this high here, this point here, here's A, B, and C. C may only subdivide as a 5-wave motive structure. 1, 2, 3, 4, 5. For the short term, from this high to this low, this downward movement actually fits best and looks best as a 5-wave impulse. This part of the wave count has a bit better fit than the main wave count. Intermediate 2 may continue higher as a zigzag. A, B, C. I have calculated a short-term target for it. At 117.04, C would reach equality in length with A, and at 115.22, intermediate 2 would reach the 0.618 Fibonacci ratio of intermediate wave 1. Intermediate 2 may not move beyond the start of 1, above 123.68. Classic analysis. At the weekly chart level, this week is completed. Would be a gravestone doji if it was in the context of an upward trend, but it's not. So I will just note that it has a bearish upper wick. A little bit of push from volume pushed price higher within the week, but you've got this bearish upper wick, so I think it's best to look inside the week to see, and a really small real body, to look inside the week to see is volume strongest with upward or downward sessions in this week. Resistance remains about 115, support remains about 107. Recently, volume has been pushing price lower, so there is push from volume. This is bearish. No signal again this week from on-balance volume, RSI neutral and ADX declining, indicating no clear trend, and stochastics neutral. So resistance, support, stochastics only reached the halfway mark up here. Price didn't quite reach to the same resistance level, a little bit below, and stochastics didn't reach overbought. We may be seeing a continuing upward swing back up to resistance. ATR declining as price moves higher seems normal for this market. At the daily chart level, bullish engulfing candlestick pattern here, so followed by a bounce that could now be resolved. Downward movement here, bearish wick here, volume pushing price lower on these two red candlesticks. So when we look inside the week, we see it's downward sessions where volume is pushing price lower. The short-term volume profile is bearish, and it doesn't actually fit either Elliott wave count for next week. On balance volume has a new week range, no signal, but we may get one soon. ADX indicates a new downward trend. It's rising from low levels, coming up from below 15 and below both DX lines. So this is a strong bearish signal. This doesn't fit either Elliott wave count well. Could fit the alternate, but it needs a bit of a bounce to complete that zigzag first. RSI neutral, stochastics neutral, and ATR increasing as price moves lower is normal for this market. That's all from me with your oil analysis this week. I hope everyone's having an awesome weekend. I'm back in New Zealand now for the next 3 weeks, and so I have really good internet connection, and I'm now settled after that long journey, so should be able to get some more work done for you. Thank you for your patience.